Another gap up today, slow grind higher. You see the stock index futures have had 4 gap ups in a row on some of the indexes. I know the ES gap up here, gap up there, gap up there. These gaps were above the previous day's close, but not above the previous day's high. This gap is actually above the previous day's high, and so was today's gap above the previous day's high. Not easy to step in and buy this, and so when you see these gap ups, having a strategy that can do that, knowing your risk and when to enter, is a good approach. Cobra 3 captured the trade plus 725 on the E-mini S&P. By the way, interesting interview today with Jeffrey Gundlach, the bond king, the new bond king. Short the S&P at 2863, and so he anticipates the potential for a pullback to take out these lows, stating that since the financial crisis, all the jobs that were created since the financial crisis have been wiped out since the pandemic started. So that's interesting. Not the same set of jobs, but just the numbers. And so we're short-term traders. Any given day can be up or down regardless of how bullish or bearish the market is. Cobra 3 E-mini NASDAQ underperformed today. It's been outperforming, and now it's underperformed today, minus 625 on the day. Adaptive moving average E-mini S&P, a plus 1175. Some really nice trades as this strategy is bouncing back. Let's take a look at where it was. We talked about it when it was in a drawdown. And so it was in this, had this massive move in March and went to this drawdown. It's slowly working its way higher. Doesn't mean it's going to go straight up. It could still wiggle down before it goes higher, but that is where we are as of today, plus 1175 on that trade. Quick dump at the end of the day. You see these fast moves at 10 minutes before the close. That's the order imbalances that come out. And so the stock market is closed now, and it's 7 minutes until the futures close, the day session. Actually, there'll be a 15-minute wait, and then there'll be another 30 minutes of trading after that. But night trader hit his profit target, slow grinding upward day, and night trader moving higher. This just feels it feels false. These rallies feel false to me. They're just so slow, and we have the Fed back in the market, so that's why we're familiar with the Fed and what they do during QE, and the market just grinds higher and grinds higher, and volatility drops and drops and drops, and it approaches a fixed income investment. Almost feels like the market could make new highs if the economy actually went into a Great Depression, because there's such a big disconnect between what the current economy is and the Fed stimulus that was done, and how long it will take effect, and if that will actually have a long-term effect on the economy. So grinding higher in the stock market. Asia 4, E-mini S&P did a great job of getting in on this trade last night. I love these trades where the market pulls back, we get a counter trend move, and then we get in, hit that $1,500 profit target. Tick count trend in Q, a little bit off today. The NASDAQ gapped up and then just him and hauled all day. And when the bulls really have control, you'll see that. They'll put the gap up, the market will go up overnight, and then oftentimes it can chop during the day. So that's what we see here. The last trade was a winner, minus 1,300 on that trade. All strategy access 3, plus 25. Grains day trader 3, minus 112.50. All strategy access 4. Cobra crude short have advised not to trade crude oil. You can't trade the June contract at TradeStation. You could trade the July, but plus 425 on that. And Cobra Gold minus 625. And those are the trades on the day. The margins have gone down. If you're at TradeStation, you'll notice that this has been updated. 25% day trade margins are back. It was 100% of day trade. Then it was 50%. Now it's 25% as the VIX drops. And so we'll see if that turns out to be a contrarian indicator, and if volatility picks up after the Jeffrey Gundlach call. So you see 25%. And then, of course, crude oil volatility is very high. Currency margins are fairly low. The day trade margin is 50%. Gold, 50%, still fairly high. Palladium is very high. But gold is, gold has been very volatile lately, big daily ranges, so you have a bigger margin in gold. And then crude oil, no day trade margin, can't trade the front month. And so this is where we are in the energy. So overall, the margins have dropped now at trade stations, so it's easier to trade with less capital when you do that. You just want to monitor your trades. You use margin to limit the amount of capital that you have to allocate to your futures account to get something done, not as an abuse to trade more contracts than what you would allocate, the amount of capital that you want to allocate to your futures trading. It's just a tool to minimize your deposits so that your other capital can be working on something else at the same time. And so don't abuse the margins, and with high margins it's more difficult, but when margins drop again, just keep that in mind. I know that if in the past I've seen traders where the even the S&P is $1,000 day trade margin, and with the $10,000 account they'll step in and trade 8 to 10 contracts right away, and you can lose a lot or make a lot real quick like that. So be careful with your margins, respect the risk. And once again, let's take a look at the S&P. Like I said earlier, Jeffrey Gundlach shorted at 28.63 S&Ps, and there's a lot of things to consider in the market environment. One of the things that I see here, Fed stimulus enters the market, volatility drops, and the market goes up. This is historically what we're used to since 2009. I think they said the best month since 1991. All Fed stimulus down here, and so you have to wonder though at some point if that Fed stimulus will lose its effect, because it can't go on forever. It's a bit of a free lunch. It's a bit of something for nothing, and the real economy does not match. And so that's what Jeffrey Gundlach was talking about. Could it roll over here? You have 26 million unemployed, and all of the job gains that were achieved after the financial crisis. Since the financial crisis has been, all these jobs have been lost, unfortunately, for those who are suffering right now from that. And so we have to trade what is true, what is real. And so day traders, short-term traders, we trade the short-term moves, but we consider the longer-term fundamentals in our analysis and revalidate what we're doing at all times. And so today was a gap up and continuation, and the market captured that. And so that's what we did. That's what we stayed with, and with the also the mindset that this could roll over. Because I think this could roll over, doesn't mean that I wouldn't take a long trade on the short term. So also, one thing to consider is that the market can go up. It can go up on bad news, and so we've got this market going up on Fed stimulus, but also there's no certainty. There's no real good news, and if we get to the point where the market continues to climb, and we get to the point where we start to get a cycle of good news, everyone's back to work and economic numbers come in and showing more bullish news, then the market could take those that went long in here and here could be taking profits. And so it's that market that the discounting mechanism of the market goes up on bad news, we get the good news, and the market takes profits. And so those are some of the reasons, some of the thoughts I have on the long-term nature of the market. Those don't affect our short-term trades, but we take those into consideration when thinking about the market and also thinking about new trades and different ways to trade.